But now time to talk the latest meme stocks, as Beyond Meat has been on a tear as of late. And now I'd like to welcome in John Baumgartner, Managing Director of Equity Research, Food and Healthy Living at Mizuho Securities. So thank you so much for joining us today. I mean, really, Beyond Meat has been one of note as of late. And we know from your report, which suggests right now, sales and overall performance could remain pressured. Really walk us through your thinking and your reasoning behind that recent pressure we've seen as of late.
Sure, Jenny. Thanks for having me. I think big picture, very volatile trading over the past 2-3 weeks for Beyond Meat. A big part of that is the balance structure, the balance sheet shift with the notes exchange, driving short covering in the stock. Big picture, fundamentals haven't really changed. I mean, this is a category where you've seen retail sales down now for 5 consecutive years. We're still not seeing new households coming into the category. We're seeing existing buyers, buying less of the product to begin with. So the fundamental challenges to the category, we don't see as really having changed relative to what it was, 6-12 months ago.
You talk about an expected material impairment charge. What do you think is going to drive that, and what are some of the, impacts on a long term by that?
Well, I mean, that's mostly accounting changes, non-cash, obviously, but really driven more about long-term expectations for the category. And, our view, going back to 2019, at the time of Beyond Meat's IPO, it was sky high, the expectations for this category. You had, plant-based beverages were a 10% share of the milk market. Plant-based meat was a fraction of the beef market. So there was a view that you would have this sort of, parity with plant-based beverages over time. COVID hit in 2020. We saw plant-based meat category sales up 20%. That accelerated the thesis of household penetration for the category. And the past 5 or 6 years, we've seen this category struggle because there's been too much focus on animal welfare, environmental issues, where consumers tell us the main reason for buying this category is actually health. Number 2, there's been too much focus on beef, when about 2/3 of consumers buying this category are buying it for other non-beef consumption occasions. You haven't had penetration in food service. So there's a number of real sticky factors in this category that lead into that presumed impairment charge coming forward here, where the long-term growth is not going to be what it was 5-6 years ago in terms of expectations.
Okay, and I am curious because I have read, extensively into this topic, because there was a day when all we talked about was Beyond Meat. I mean, it was one of these pandemic era, truly hyper-driven stocks, but price parity is a concern, as you mentioned. Just the fact that beef right now not really seeing the same, maybe perhaps unprecedented demand, but also it's more expensive than just outright buying real beef. But also the lack of adoption here in the U.S., as I have read, just that outside of the U.S. there is actually perhaps more of an appetite for these types of meat alternatives. So is that just right now a lack of market interest as far as consumer interest that's also driven some of this weakness?
There is, and I think what's interesting and what's new and different now in this category is just this push towards protein in the U.S. And for a long time, we've the bull case has been once you get parity, price parity between plant-based meat and traditional animal meat, that's when you'll start to see the household adoption accelerate. And what we're seeing now is you actually now have, not because plant-based prices have come down, but ground beef prices are at a record high. You're actually seeing parity, and it's not driving incremental volume. And the surprising fact is, we're seeing more consumers, record high demand for animal meat, beef. The protein trend is very strong right now, favoring traditional animal meat consumption. So that's a new headwind for the category in terms of how you differentiate, if the consumers are really dialing up that protein exposure.
John, I noticed in your note you have sort of the different valuation scenarios: base, bull, bear. Can you kind of walk us through high level what those are and kind of what shifts us between the different options?
Sure. Our base case right now for the stock is $1.50 per share, and that's based on just discounted cash flow valuation, thinking out long term, next 10 years for category growth. You look at the bear case for this. You look at Oatly, the best plant-based public peer to Beyond Meat. Oatly's trading about 2 times enterprise value to sales on 2026 numbers. If you were to apply a similar valuation multiple to Beyond Meat, you're seeing downside to $1 or even less, on that measure. In terms of the upside, that's a little bit skewed by the meme nature of the stock, in terms of the short term with short covering from here. But it's hard to really see much more upside to the stock from current levels, given continued free cash burn, sales declines going forward. We don't model free cash turning positive at least until 2028.
Okay, and so how much do you pay attention to some of the developments we've seen from the meme stock crowd, or those that have this this heavy short position or sort of anti-short position, I guess, in this name. How much does the recent price play into your overall thesis?
Well, it's hard to overlook it, especially on a short-term basis. I think the fundamental issue here for the stock has been the high short interest of the float traditionally, which has driven these short covering squeezes time again in the name over the past 5 or 6 years. So it is an issue more for short-term trading than it is for more of a fundamental investor. The rallying doesn't change the fundamentals in the name. And if one thing does change, perhaps, with the increased equity float from the convertible exchange, is it may actually be easier and less costly to short Beyond Meat shares going forward. So that could put renewed short pressure on the stock in a downward perspective going forward.
Yeah, and I agree. It's hard to separate the two, but I do think that, based on everything you've said, it is still, there's still these major near-term hurdles and near-term real obstacles that they still face, outside of the phenomenal run-up and the giveth and taketh we've just seen from the meme stock frenzy. So we so appreciate your time on this Monday. John Baumgartner, Managing Director, Equity Research, Food and Healthy Living at Mizuho Securities.